All right. Welcome back to the channel, everyone out there on YouTube. In this video here, we're going to talk about top-down analysis, the approach that we need to take in using a higher time frame to put us in the right direction, I should say, when we are looking to enter the market. Okay, understand that I trade supply and demand, so I am using in this approach here a higher time frame, okay, to depict or give me a bias of which way I need to be taking my entries each and every day. Stay tuned, watch the video or watch the intro, and we're going to jump right into that video right now. Now, first and foremost, what I do not want to see anyone do is to take a trade against the grain. That means that you want to be entering the market with the flow of what the higher time frame is showing you, meaning the same direction, okay? We're going to take a look at here on a setup that occurred pretty much on the 15th of March, all right? It was around the London session time. But still, it's an example to show you when we are taking or looking for those, taking a top-down approach, analysis. So it's a way to be able to get into an entry, moving in the same direction on which the market is moving, okay? So take a look here on the 15th. This is my higher time frame, the 60 range chart. You do not have to trade 60 range chart. I'm just saying that use some means of a higher time frame to put you in a better direction and letting you know which way the market is moving, okay? And it will help you as far as giving you more confluence and confirmation, all right? So if you're using just a one chart, like I use a 12 range chart, which is my entry chart, yes, I can still take my setups based off of that, but there are things that I need to really see. Now, to all my beginner traders out there, if you are someone who is starting out a new career in trading the futures, I highly recommend you stay tuned, continue watching this video, because using paired charts, especially using a higher time frame, like I said, and then moving down to a lower time frame is going to really help you, identify key areas and be able to mark off those areas off of a higher time frame to be able to take a good solid trade, okay? And most times you can just take one good trade and you're done for the day, all right? All right, so let's take a look here. Higher time frame, 60 range chart here, okay? Now, what we see, just going over the basic market structure, looking at analyzing the market, is the market has been moving to the downside, right? But we all know at some point the market can shift and move a certain direction. It does that when it reaches this low point here or low on March the 12th. Then it starts to make a run back to the upside, okay, making higher highs and higher lows. Now, what is it that you see here that takes place? We see a new high right here at 72 being formed, right? It takes out this high here from March the 12th. So on the 14th, it took out this high from the, actually the 12th, the 13th, I'm sorry. This was the high from the 13th. This was the high that it made on the 14th, okay? So it made a new high on the 14th, taking out this area here, all right? Now, that doesn't mean that the market is just ready to start blasting to the upside. Oh, and you start, devising a plan or a bias to start taking your trades to the upside, all right? What I want to see take place is, yes, it did make a new high here, but what gauges or what gives us the overall decision or helps, formulate that idea that we need to start taking entries long is when we see a high, then a lower high, and then a new high. So price breaking structure to the upside. Now, it took out this area here. It took out a major swing here, a major high right here, okay, right here at 72. Of course it did, right? But we need for it to do what? Is to make a run to the upside, meaning make a basically a new direction, change shift and change direction by giving us a high, higher low, and a higher high approach, okay? So the top-down analysis is going to help us decide which way we need to take our trades. It's going to help us decide. It's going to help us identify and mark off a zone to which we can solidly mark off in the market to allow us to take a solid trade as well. Now, I mentioned just because price made this high right here, I say okay, price broke an area or major high here. That doesn't mean, like I said, I'm going to take a trade long. Okay, so because what I'm going to show you is an opportunity to take a setup going short. Okay, until we get that high, higher low, higher high approach or a step to the upside, we're not ready to start taking long entries. Okay, All right, so pay attention here. Makes a new high here. What does it do? When I see this right here, like I said, I'm not ready to start take long entries yet. The market makes a run to the downside, and then because it makes a low here, okay? That's what I'm trying to say. It makes a lower high. Now, at this point here, I'm still interested in taking shorts in an instance because it made a high, a low, a lower high, and then it makes a run to the downside, okay? It makes a new low. When I see something like that, even though price did break a major high here and then it starts to fold to the downside and continuously start to make lower lows and lower highs moving lower, then this could just be, to me, just the opportunity where price just wanted to retrace a little deeper or a little higher just to maybe push lower. And it is ranging, okay? All right, so pay close attention to what price needs to do to help you gauge what type of trades to take as well. It makes a high here, makes a low, lower high, and pushes lower. Now, what it did do when it made a move to the downside here, okay, where it made this low, a lower high, and a lower low, it took out an area right here. It took out a low right here, all right? And this can be classified as a minor low in a sense, but it is an area of structure that price took out, okay? Because price could be doing or making a path like this right here, where it made a low, a high, just to come back down and make a new low, okay? Which means everything in between right here, as it's moving lower, could be considered as minor lows until it breaks this major low right here, okay? So understand that. Now, being that price broke this minor area, this minor low right here to the downside, okay? Look, there was structure that was broken as price moved lower. Price made a low, lower high, boom, broke structure. And this was a nice, solid push to the downside with a lot of aggressive force that happened real fast, which means there was a lot of volume, a lot of momentum that caused this this move to the downside, okay? Where price took out this minor low here. And this is classified as what I classify as a quality area structure that price took out right here, okay? When it took out this swing right here, okay? So you go ahead once you see price make a nice break of structure to the downside with a lot of force or momentum to the downside, look to see if there are gaps that price left behind. Yes, there are imbalances when price made this run to the downside. Mark your area of structure, excuse me, not your area structure, your supply area now, okay? Because price took out an area here, took out a swing, but it also broke structure to the downside. So go ahead and mark off your supply zone, all right? Now, what we do is we want to wait for price to do what? To retrace back to that zone, okay? We do not want to take the trade off of our higher time frame, okay? So what I'm trying to get you to understand here is that using multiple time frames, because now we're going to scale down to a lower time frame, but we're looking at overall the top-down analysis approach to use. Allow the higher time frame to help you devise like I said, a direction in which to actually be potentially taking trades from. And once you see the setup or a setup happen, mark your zone. In this case here, we marked our supply zone. Now, we still want to wait for price to pull back to it on a higher time frame. Once it taps into the zone, okay, we want to move down to our lower time frame. Whatever lower time frame that it is that you may use, okay? It could be a 5-minute chart. You could be looking at a setup to take place off of a 60-minute chart and then move down to a 5-minute chart. I'm using a 60 range chart and moving down to a 12 range chart, okay? So let's make that approach now and scale down to our lower time frame and look to see what happens, because we want to take our trade once we see a particular setup, a specific setup happen off the lower time frame, okay? So let's move on down now. Price is tapping to the zone on the retracement, okay? Back to the upside. But one thing I want you to pay attention to is that what did it do when it started making moves to the upside? It started forming areas of liquidity. Liquidity, it means that price made a high here, a low here, a high here, lower high, and a new high here. At the back end of every swing to the upside, meaning the low of every swing to the upside, as it retraced back to our zone, there's going to be liquidity, okay? And that's what price tends to want to aim for. I'm not saying it's going to, once it reaches this zone here, that's going to sell off and start capturing every area of liquidity below. It's not always going to do that, okay? We just try to aim for those areas, okay? So let's scale down now to the lower time frame chart. Okay, so this same low we see right here, where price started moving lower, I mean, moving higher, making higher highs and higher lows. That purple line you see, I'll show you. Where's it at? Give me 1 second, guys. Here it is right here. That purple line right there. This was the area which was the low off of our 60 range chart. Right here, 65. You see that purple line there, that's where the zone is on our 60 range chart. And we're waiting for price to retrace back to. It goes back to that area, okay? All right, we'll minimize this, blow this 12 range chart back up. Okay, 65 here, purple lines right here. That is the 60 range supply zone. Now, all we're waiting to happen here, the same thing that we just saw that we were looking for to unfold or take place on the 60 range chart or whatever higher time frame you use. We're doing that now on the 12 range chart, or chart that we moved down to or scale down to, okay? So that means we're looking for a supply zone setup. Disregard this big box here. This is the area right here, this little box I drew right here. Price taps into the 60 range supply zone, okay, which is identified by that purple line right there. We're looking for a supply setup to unfold now on our 12 range chart. All right, price breaks lower with a lot of force, a lot of momentum to the downside, and takes out a swing right here. Okay, all right. So a lot of force to the downside, taking out a swing here, right here, means that we can go ahead and mark an area of supply. Okay, why? Because there was aggressive selling that took place here. Aggressive selling coming out of an area that takes out a swing, or what I classify as a quality area structure. Okay, this is off the 12 range chart. We can go ahead and mark our supply zone. Okay, so we got aggressive selling, mark supply zone right here, as we did right here. And at this point, we're just waiting for price to retrace back to the 12 range supply zone now. Once it retraces back to that area, all we're looking for price to do is to do what now? Is to break a candle in the opposite direction. All right, meaning this was the last green candle to the upside. I'm looking for a red candle to take out that green candle now. It does that. Once we get the break to the downside here, we're in the trade. Okay, we're in the trade. Now, the first place you can aim is the low. Okay, where price will trace back up to the supply zone on the 12 range chart, and then, you know, if you have multiple contracts, you can allow yourself to trail or run behind price and start aiming for areas of liquidity below. Areas of liquidity are going to be each swing low. The swing low here, all the way down to a swing low here, back down to the low down here at 65. All right. Now, like I said, price is not always going to move and continue taking out every area of liquidity, but it takes out a nice, and it runs nice to the downside here. If you take a look, rejects here, boom. What does it do? It pushes lower, takes out that low right there. Pushes lower, swings back, takes out this low right here. Pushes lower, pulls back, takes out this low right here. So it took out several areas of liquidity back down to the downside. 1 here, 2, 3, before it decided to push up, okay? But that's the thing. Take a look at here. If you got into the trade right here off the rejection of the 12 range supply area, once it broke below 41, okay, look where it came all the way down to. It ran all the way down here to 94. 94. That's almost a solid 50-point move right there, okay? If you're able to, I know a lot of people are probably going to say, well, that's kind of hard to kind of stay in a trade like that. It depends on your experience and level and understanding the market and how the market moves, okay? All right, and what, you know, when I say they, I mean the banks and the institutions are really trying to do, okay? You have to understand what they're aiming for, all right? But still, at the end of the day, what I'm trying to get you to understand is how to take and look for and follow the top-down analysis approach using a higher time frame to put you in direction of a trade entry, okay? In this case here, we saw, like I showed you, off the 60 range, where even though price made this high here and took out this major high right here, it was not ready to continue making runs to the upside, all right? Once because it pulled back. We want to see a higher low develop and then a new high taking out this high right here, which it didn't do. Not until it ran all the way down here to 65 and then decided to do so. But before or prior to it doing that, it took out some areas of liquidity. Still, there's opportunity to take a short here, okay? Why? Because it made that high here, it made a low here, followed by a lower high here, taking out structure or taking out this low right here, this minor low here, and running to the downside. At that point there, when we see price making a new low, a higher low, a lower high, and then taking out structure to the downside, a minor low here, my mind is still shifting or in direction to take a short entry, at least once price pulls back to this key area of supply off the higher time frame, and just scale down and look for that supply setup to the downside, or set up off of the lower time frame. Step-by-step approach, okay? But using, like I said, the higher time frame, that top-down analysis to put you in a trade or put you in direction of a trade. In this case here, to take shorts. We're still looking to take shorts until price does what? Until price has shown its hand and takes out this high, meaning breaking structure. So basically it's doing this right here. Let me show you. It made a high here, pulls back, makes a higher low here to take out structure right here to the upside. Once it's made a new high here, then you can say, all right, the market is now looking for opportunities to go long. It is bullish. It wants to go long, so let me start looking for opportunities or setups to go long, all right? That's when your mind to start to shift. But do not allow yourself to really start taking long entries until, especially when we're looking at the higher time frame and taking that, from just looking at things from a bigger scope. Do not allow yourself to start taking long entries until the market shows you its hand. All right, making a high here, breaking a major area of structure right here, or breaking a major high here, making a lower, a higher low here, and then making a higher high here. Okay, taking out structure. That's when you're ready to start taking long entries. Okay, so. Again, this video here is really geared more so for individuals that are beginner traders or new traders, whatever the case is, that maybe you don't understand market structure, and maybe this kind of helps you understand a little bit better what to look for, okay, when taking trade setups or looking for trade setups. How to identify which direction or what direction to take trades from, okay? In this case here, I just told you, made a new high here, but don't start looking for long entries until the market shows you it's pure or a solid direction that it wants to show you, high, okay, higher low, higher high, breaking structure. Now I'm looking for long entries, okay? So anyways, I just wanted to break that down for you guys and kind of, help anyone out there that maybe is trying to still understand market structure, but also still trying to understand, or how to take supply and demand, or where to take supply and demand setups from, or being able to mark those zones. Just want to kind of clear things up, clear the airways for you. But if you're interested also with joining our Discord, you can come over by finding the link down in the description portion of the video. Click on it. It's free of charge. We have a great Discord community filled with over 1,000 members now. And there's 2 channels there. You can, if you're someone that's new to future trading, then maybe you can go into the general chat channel and maybe ask questions you may have. If you're interested and you already know how to trade and you are actually trading, it doesn't matter if you're trading demo or sim, whatever the case is, and you're still practicing and your strategy actually works, or someone that's trading live, whatever the case is, we have the trading floor, and that's what we share as traders, our trade entries, our levels and zones and things of that nature. So you're interested, I'm not interested, but you are more than welcome to invite yourself in free of charge by finding the link down in the description portion of the video below. But that's all I have for you guys today. Maybe that will, 3 things here today may have cleared up, being able to understand market structure a little more, being able to understand the top-down analysis approach using a higher time frame, as well as how to mark and identify certain or key levels of supply and demand. That's all I have for you guys in this video here. Take care, and I'll see you in the next one.